Hey, what's going on, everybody? Duck here. Just want to do this quick Bitcoin static update video here for you guys, just to take a look at what we got going on here. So I backed up a ways here just so you can see, back here when we hit the low here, went all the way down to low 3 grand area here, and we put in, that epic bullish Gartley pattern that basically just sprung us on this parabolic move. Um, we went from 3 grand all the way up to basically 14, and have since then been correcting. And you can see here we've plotted this fib channel. This current fib channel has been very well respected throughout here. So we first after the major run there, we corrected by forming this bearish cipher harmonic pattern, which played out obviously very bearishly. In doing so, it created the first leg of what became our second harmonic here, which was a bearish bat pattern. And again, you see this played out bearishly. We did have a smaller Gartley that did form. You know, I was really hoping that this was going to be what took us out of this downtrend and possibly started a little bit more of a bullish run up again. But I mean, this Gartley, it did what it did kind of what it should have done here. I'm not that disappointed with it. If you would have entered in our D long entry, you would have had a stop just below the X of the XABCD pattern, and your target would have been the C. And if you went for a second target there and got a little brave, you would have been targeting A. And that's what we were kind of was hoping would have pushed us out of this channel. Obviously, we did not hit the A. We did, however, come pretty close to that C. So, this Gartley did play out. It was a valid harmonic. As soon as that happened, though, you see that we rejected immediately off of this 200 here, which we've been obviously respecting as well along the way. And as you can see, we are soon reapproaching the 200 moving average. So we got to keep that in mind, be aware that this is coming. So currently, what do we got going on here? We had the Gartley played out, hit a target, and then basically just dumped and failed. Um, what we had going on here, hitting that Gartley target D, going up. Again, the momentum was low. We kept putting in lower levels of positive momentum, and you can see here. I mean, we had this just speck of nothing of positive momentum, which basically kind of led us into this dump. You can see it was basically right here. I'll expand that just so you can have a small glimpse of what that was. But there's your positive Momo, that little speck there. And what that was just was, bearish convergence. That just threw us right into it. We rejected off the 200, put in absolutely no positive momentum, and then just dumped. So now, basically, we've kind of we've found some range. Bitcoin's now obviously been range bound, basically for some time now, about 3.5 weeks, we'll say. And yeah, I mean, we were range bound between 7,700 right now and 8,650. You can see we had a couple penetrations out of this parallel channel here that we've plotted, and this parallel channel has actually been respected as well. We have 1, 2, and almost 3 on the bottom. So definitely, 1, 2 on the bottom. There's your 3 on top. And here we respected it very well. And here we went up and we actually rejected this fib channel, 0.25 line of the fib channel there. And that just sent us, falling right back into the heart line of this parallel channel. So currently, that's where we have found ourselves, and Bitcoin is, this is just signs of accumulation. We had some good accumulation here, kind of stepped up in the range a little bit and are further accumulating. We have what you can kind of say is some, bullish divergence forming. This, obviously, being in the middle of a range like this is, you know, you can really call it no man's zone. There's no distinct trade available for us at this exact moment. I mean, we do have the divergence, but if you weren't already in since down here where we got in the Discord, um, getting in up here, it's not the lowest level of risk area to be entering. You'd be much probably better suited to wait for this to either dump and catch some support here back on the bottom of this parallel channel or the heartline of the fib channel. So this would be a good low risk area for a long. Or if this does break to the upside, you'll probably see this. Where's my brush here? Probably see this do something like this, catch us right here in this a little bit, maybe double bottom on it, and then take off to the upside. So that is something we could very likely see here. So ultimately, what we're looking at the moment here is a measured move out of this range. So that's a 12% move that it created. Obviously, these percentages change. But these measured moves it's basically going to be one or the other. Um, and the crazy thing is there's a valid argument for both of these moves. So I guess let's start with the bullish case scenario first. We would have, obviously, we would play, the divergence would have played out. This would have been a bullish divergence. It would have played out accordingly, which it's actually starting to. So currently, this is the direction. So far, it seems like it wants to go. Obviously, we know that can change at any time. In order for us to maintain this bullish trend, we must hold this heart line. And even more so, it's almost like we got to hold 80 to 40 roughly. But that heart line would suffice to, if we wick down, touch it. It's more closing, candle closes below that. That would be concerning. That would, make this case start to, be more clear now. But right now, I would say this upside target is what we're looking for. And in the Discord, we've been long for a while now. We posted a trade setup that had us going. I believe the most recent setup we longed 82 with a stop at about 79 with a target of 9400. 9400, that target basically would have looked a lot like this. You would have had a stop around here, and you were targeting 9400 basically, which is about right here. This long position, the reason we're targeting this is this is actually a square up at 9400 that we have not squared back up yet since this big dump. And what a square up is it's basically it's a price at which the exchanges can offload their positions at a break-even price. They do this consistently, whether it's to the upside or to the downside. We have square ups all the time to the up as well as to the down. So a square up doesn't always happen immediately. Very similar to how gaps are filled, I guess. You see these gaps out there on charts, and at some point price action just comes back, fills that gap, kind of squares up that move. And now that basically once a square up occurs, if we were to square up at the 9400, like I said, the exchange would have offloaded its position at a break even price, and the market is quote unquote neutral. It's back in the hands of the market makers, the bulls, the bears, whoever decides to take it from there. But the exchanges have done their thing, and they're waiting for the next move to occur. So, this upside target here, being that we had already kind of had this not measured move, but this 9400 square up already in mind. And we've had that in mind since we dumped. But we had to figure out where we were going to create support so we could then identify how we were going to get back to that square up target. And, some things that happened along the way. We did have let me get my magnet in here. We did have another harmonic pattern that formed along the way here. This was a bullish bat harmonic pattern. As you can see, this one, from the D target entry, you would have had a take profit. 3 take profits I like on the bats. We have a 618, which is about here. It's above the B. It is the 618 from the swing high C to the swing low target entry D. We would have the 618 retrace, which puts you around here. Obviously, we hit that almost all of it in one wick, really, in one candle, excuse me. So we had the 618. Then our next target would have been right here at the A, which is actually where that first candle kind of wicked to. But then the second candle took us to the third take profit target, which is the C. No, yeah, that second candle took us to the C. And, it did get a little bit higher than that even, but those were, that was probably the 1272 or the 1414 from the C to D. If we were to fib it, it's just kind of small there. That's why I wasn't fibbing it. So let me zoom in for you here a little bit just so you could see what I'm talking about. Fib extension from swing high C to the swing low D. You can see that absolutely we did hit the 1272 before retracing all the way back and giving up all those profits. That's why we have these take profit levels. That's why we have this stop loss. This could have kept dumping, went right through, stopped this trade out. So if you didn't take these 3 target profit areas, then you're just giving all your profit back up. Remember, it's important for us to always have everything we need for our proper trade setup. Remember that our trade strategy includes a position entry of a risk reward that's got at least 3 to 1 on our favor. We want to have a stop loss in play, and we want to have our exit positions. In order for us to take these, execute our trading strategy, we wanted to see pattern development. We got pattern development in the form of our harmonic. We'd like to see divergence on multiple time frames. We'd like to see divergence on multiple oscillators. This did have some nice solid divergence, I believe, on the 1 hour. Let's see, where is our... was it the 1 hour? Where were we playing this at? I'm not sure where that was at. This here was on the previous kind of drop here that basically put in this a anchor point. So yeah, the coinciding variable was missing on the div, but we were at a critical fib level, which was this major support. And that was our critical area of support resistance. So we did have a lot of our variables. It's even better when we have more of them. But you could see this played out fairly well for a good little trade setup there. Okay, so let me clean this up here a little bit. Let's get rid of that. Let's get rid of this fib here. Okay. All right, so where were we here? All right, so going back to, I think I got rid of actually our parallel channel. Let's replot that parallel channel. And you can see I just went 1, 2, and 3 on the top, and then I brought this kind of back over. Okay, so back to our measured moves here. So again, we kind of covered this upside measured move. We had a square up of 9,400. We have the measured move of the parallel channel. So we have a couple of coinciding variables. We have divergence on the MACD on the 4-hour. So on a significant time frame. And also that measured move is the 70% retrace of this previous drop. And that basically, let me go back to that for you real quick. Basically on our retrace like this, we put our swing high in, put our swing low in. What confirmed our swing low was this measured move out of the bat. Even the C anchor confirmed it, but the measured move really confirmed it. Our take profits here. What I mean by confirming it is we went and we retraced back to the 236. That confirmed that this was indeed the swing low, valid anchor point. Next, now that we have our fib in place, we're looking for our golden retrace zone, and that's between the 382 and the 618. So again, we have not gotten into our golden retrace zone. We wicked into it barely, and that was it. So we basically have this area that we need to get back into, which this fib retracement is what's telling us that this area needs to be retouched again. Basically, it's going to fill all of this just dramatic drop. Basically, it needs to form price action like this. Having nothing here, it's bound to come back to it. We've seen this time and time again. It's bound to come back to it. So again, we have a golden retrace zone. We have a measured move of a parallel channel. We have a 9,400 square up. And we also have, which would retest the top of our major. Let me get rid of that, clean this up a little. That would retest the top basically perfect. I mean, you could see right here, 9,400. Here, I'll do this for you guys so you can get a real clear picture of where we are with 94 is right there. So, I mean, odds of us coming up here, doing something like this, and going right to this area here is not at all out of the question. At that point, though, we would be left with, we can't be talking right now that this is going to 15K or 20K or 30K or all this nonsense that you see all over Twitter all the time. What happens if you hit this major square up at a major resistance level, and at that point we're diverging bearishly on the oscillators? You mean to tell me that you're longing this to 15? Come on. The only thing you're doing is filling our long profit targets. That's all you're doing, and I appreciate that. Someone's got to provide some liquidity in this ratchet, right? So anyways, that's kind of our hopium scenario. This is the trade that we're currently in. Have been in this trade for a couple days now, and have no intentions of closing anytime soon. Again, targeting 9,400. If we were to break to the bearish side, let's just throw that scenario out there because, at any time that can always happen as well. So again, it is very important for us to maintain this 80 to 40 level. So let's go down here. 80 to 40 is here.